Hey guys, Robin here. So as of now I have 4 different Vanguard ETFs spread out between 2 brokerage accounts. I have a retirement brokerage account and a regular brokerage account. And I'll show you the 2 accounts here on the screen in a bit, but do note I'm not using the Vanguard platform for buying Vanguard ETFs. Instead I'm buying the Vanguard ETFs over at another brokerage called the Giro. So before checking out my 2 investment accounts, let's look at the overall market's return this past month, December 2021. So the graph you see here is of the S&P 500, and on December 1, 2021, we started at 4,595 points and ended the month with 4,772 points, a gain of 3.86%. So we saw a new record high for the S&P 500 on December 27. So for the ones that aren't familiar with candlestick charts, in a nutshell it works like this. So every candlestick you see, whether it is a green or red one, represents a specific time frame. So in the example I showed you here, every candlestick represents 1 day. So if the candlestick is red, as it is of December 1, the day closed with a loss. If it is green, it closed with a gain. So another good thing to note is that the upper part of a red candle shows us that day's opening price. So the bottom part of a red candle shows us the closing price of that day. So again, in my example you see over here, this red candlestick represents December 1, 2021. The opening price was the top of the stick, which was 4,595 points. The bottom part of this red stick was the day's closing price, 4,510 points, a loss of 85 points or 1.84%. So a green candle works in reverse. The top part of a green candle is the closing price and the bottom part of a green candle is the opening price. Pretty interesting, right? Sometimes I find it fun to dabble a bit in this software and check out different assets to see how they performed over specific time frames. You can check it out yourself if you want. I'll leave a link to the website I use for this in the description below. It's a free tool. At the very least, they have a free version, and I'm using the free version as well. So that being said, let me first show you my main account, my regular account. In this account, I have 3 different ETFs. So I have 1,484 shares of the Vanguard S&P 500 ETF of a total value of 116,108 euros. I have 635 shares of the Vanguard All World ETF of a total value of 68,618 euros. And lastly, I have 105 shares of the Vanguard Emerging Markets ETF of a total value of 6,300 euros. So the total value of my Vanguard stock portfolio in this account currently sits at 191,782 euros. And as you probably already saw, whenever I reference a number in euros, I'll show you the equivalent in US dollars and British pounds somewhere on the screen, since not everyone uses the euro. So besides my regular account, I also have a retirement account. And the advantage of using a retirement brokerage account is that I can deduct the money I can add to this account of my taxable income, meaning I will pay fewer taxes next year. And that's why it's important that you first max out your retirement account, and if you have more money left over to invest, you can put it into your regular brokerage account. We don't want to give the government more money than needed, right? So do note, every country has its own rules regarding this. For example, the 401k is the most popular retirement investing strategy in the US. So in my retirement account, I only have 1 Vanguard ETF, which is the All World Accumulating ETF. In my regular account, I only have distributing ETFs. And the difference between the two is that a distributing ETF distributes dividends to me as a shareholder, whereas the accumulating ETF reinvests its dividends automatically. And I chose to buy the accumulating ETF in my retirement brokerage account because I can't withdraw money from that account anyway until I reach the legal retirement age in my country. So I own 110 shares of the Vanguard All World Accumulating ETF in my retirement account. And the total value of my retirement brokerage account currently sits at 11,363 euros. So all in all, the total value of my two brokerage accounts combined is 202,389 euros. So did I buy any new stocks last month, in December 2021? Yes, I did. On Monday, December 20, I purchased 94 new shares of the Vanguard All World ETF in my regular brokerage account. I added 10,000 euros to my brokerage account and purchased 94 new shares with a total worth of 9,888 euros. The current price of that ETF was 105 euros and 20 cents on December 20, and I now have a total of 635 shares of this ETF. Last month, December, was month number 15 that I added 10,000 euros to my brokerage account, meaning during these previous 15 months I added 150,000 euros to my investment accounts to purchase Vanguard ETFs. And I think this is a wise decision, but we'll see 10, 20 or 30 years down the line. So the total profit of my regular brokerage account currently sits at 35,955 euros. My retirement brokerage account, on the other hand, has a loss of 102 euros. So adding these two numbers together, we get a total profit of 35,853 euros. And to paint you a better picture, I started my regular account in May 2019, so almost 3 years ago. And I started with 200 euros per month, then 400, then 1,000, then 3,000 euros, and eventually since October 2020, so 15 months ago, 10,000 euros per month. So in total, I added 156,902 euros to this brokerage account. And as you can see, and as I already told you, this account is now worth 191,782 euros, an increase of 22%. And dividing 22% by 3 years, because I started in 2019, is a return of 7.33% per year on average. Of course, it is a bit of a distorted image because I added most of my money, the 150,000 euros, since October 2020. So some people stopped adding new money to their investments because we're at a market's all-time high. But should you and I stop buying new stocks? No one can tell you when we hit the height of the market. Every month or week, a new article or an expert says we are near the biggest crash ever. But if I had listened to these articles or videos or tweets months ago, I would not have been where I'm at today with these profits. And of course, yes, it is possible that the market suddenly tanks today or tomorrow, but looking at the market's history, the chances that the market will be at a higher state than it is today in 10, 20 or 30 years down the line is much more likely. So my strategy is to keep buying more stocks when I still have more cash than I need. Anyhow, thanks for watching. Make sure to subscribe and leave a comment if you want to say hello or ask me a question.